Hey everyone, it's Jeff McGinnis. I'm with CrossCountry Mortgage, and today we're going to talk about income. And there's several ways to calculate income with regards to mortgage lending. We can use regular W-2 income. We can use self-employment income. We can use 1099 income. We can use asset depletion, and we can also use bank statements to calculate income. They're all very different, but they're all out there. So today I'm just going to talk about W-2 income. It's the easiest one to go through. So let's talk about that. So what the majority of lenders are out there are looking for calculating your income when it comes to qualifying for a home loan is a 2-year work history. And if you happen to be employed by a company that pays you a W-2, it's very easy to calculate your income. You just basically take your W-2 income, your salary for the year, or if you happen to be hourly, what has been on your hourly rate on your paycheck for the last couple years. We take an average of that income. We basically take a monthly average. So we take your annual salary or your annual pay and divide that by 12, and that would be your gross monthly income. And that's the income we'd use to calculate what we call your debt to income ratios. So that is our first and easiest way of calculating income. And in some subsequent videos that I'm going to shoot, I'll talk about the other types of income like bonus and overtime and commission only, et cetera, et cetera. But for today, super simple W-2 income. We'd like to see a 2-year work history, and we would like to take a 12-month average of your income. So we take your annual income and divide it by 12 pieces, and that's W-2 income. So if you have any questions, feel free to reach out to me. Otherwise, have a great day, and I'll talk with you soon.